Welcome, everyone, to Stock Wisdom Tips, the stock channel that combines education and stock tips in one place. Please support our channel by hitting the like and subscribe button so we can continue making great content for all of you. Very exciting episode today. We will be looking at our picks for the coming year, as well as some predictions for the economy, interest rates, real estate, energy, really the main drivers that we feel are going to dictate the performance of the market in 2023 and that dictated the performance of the market in 2022 as well. And what a year 2022 was. Action packed. So for the market, the S&P 500, it was, there's still a couple of trading days left, but it was the first double-digit percentage annual loss since the Great Recession in 2008, when the index slid almost 40%, I think 38.4% to be exact, in 2008. So essentially, it's been the worst year for the S&P 500 in more than a decade. But look, let's put things into perspective. The S&P 500 hasn't seen a back-to-back down year since 2001 and 2002, where of course it happened consecutive years, and that was of course the big bursting of the dot-com bubble. And again, on the positive side of things, the index has typically delivered an average annual gain of 9% since 1996. So obviously, very positive performance. Now, we believe 2023 will be the second down year in a row. And as we say all the time, however, that doesn't mean one cannot make money in this market, but it will be a stock picker's market. So let's talk a little bit about the economy first. We have the quote up there: "Don't fight the Fed." That's very, very true when the Fed is cutting rates and increasing money supply. You don't want to be short. You don't want to be shorting things. The market is on an upward trajectory, and in contrast, here the Fed continues to tighten, and we believe will continue to tighten. And even if they don't continue raising rates aggressively, the rate increases, the number of rate increases in 2022, I mean, the effects of those we're going to see in the coming year, of course. So it typically takes several quarters for those effects to come into play. Rate increases, especially significant ones that we saw, right? 50 basis points, 75 basis points. So those are very, very significant. I think that they're saying, the greatest increase in rates in 40 years. A lot of us haven't seen those types of increases in our lives. On the recession front, huge talk about recessions coming, recessions already here. A lot of people saying it's going to be mild and quick, short-lived, in other words. We don't think so. We think it's going to be mild, not a huge recession, but it will be a bit lengthier than what people are thinking. On the real estate front, again, high interest rates, decades high interest rates will continue driving weakness in the real estate market. So anyone looking, to get into real physical assets that you can touch, right? Stocks and bonds are not things that you can physically touch or live in or rent out. Great opportunities coming up. That said, as well, in terms of job losses, which typically influences consumer spending, 60-70% of the economy is consumer spending. Job losses will start increasing. We're seeing it now. Companies are talking about it in the coming, that they're going to cut in the coming year as well. So that's something to watch out for very, very carefully. And however, that can offset the Fed's very aggressive rate increases. If they see that they're starting to, the unemployment rate is starting to tick up, that could be a positive for, for us investors, bullish investors, in terms of the Fed sort of easing. People are talking about pivoting. We don't think there's going to be a pivot. They've made a number of mistakes, including calling inflation transitory. They don't want an egg on their face. They're going to make sure inflation is defeated, right down to their 2% historical target. So let's talk about the equity markets. Again, we think it's going to be slightly down, not a huge loss, flat to slightly down because of, all these things we talked about. However, it's going to be highly volatile, just like this year. Of course, the VIX doesn't show that. We'll talk about what the VIX is in maybe an upcoming video, but high volatility means active traders, which we, encourage our listeners to be active traders. Book those gains when your stocks go up and cut your losses when stocks go down, but also take advantage of the fluctuations of the market. So a highly volatile market means more opportunities for those kinds of trading. Stock pickers market, we'll talk in a few minutes. A couple of picks that we think in 2023 might be very fruitful. And then in terms of sectors to look out, doesn't look like that war in Russia-Ukraine is ending anytime soon. So that's going to continue putting upward pressure on energy. So that's certainly the strongest sector this year. It's going to continue to be strong next year, in our opinion. Information technology, so high tech. I think valuations are getting to levels that are very attractive, and then we feel industrials could also be an interesting area to look at. So let's take a look at a couple of stock picks here for 2023. We've looked at these in terms of three different categories. The first one I am calling blue chip stocks. So things that are, stable companies. Now, it doesn't mean their stocks are necessarily stable. If you look at, again, this year, a lot of these names have gone down significantly. But will these companies go bankrupt in a year, 2 years, 3 years, 5 years, 10 years? Most likely not. So they're blue chip companies around for many years. So if you buy these at the wrong time and they, go down a little bit, if not a lot, you can hold them. They're steady Eddie companies. Disney, we've talked about in a previous video. I encourage folks to look at that. We're, continuing to be very, very bullish on Disney. And I think in previous videos, we had said likelihood of a 30-40% appreciation in 2023. We think, if the market's not very weak, Disney can appreciate by a good 50%. Bank of America in the financial side of things, net interest margin. Banks are making a lot of profit, a lot of cash flow based on, again, the difference in interest rates they charge for borrowers to folks that borrow money from them versus folks that deposit money into their institution. So net interest margin will be, in our opinion, a tailwind for the banks. Google, this one's a buy and hold. A leader, will remain a leader for many, many years. There's a video for Google as well. And then we like Ford as well. It's catching up. It's number 2 in the EV space. Tesla's troubles are good news for Ford. And they're doing, everything right. They've got solid management and good products as well. On the growth side of things, so big caveat here, these guys can go down quite a bit. So watch them carefully with your alerts, with your price points, dollar cost averaging. But we think Lucid and Lyft can be interesting trading vehicles in 2023. So in other words, if you're able to, pick some bottoms here, you could make some decent coin and trading profits. Lucid just had a huge raise of capital. So any fears of them going bankrupt anytime soon, I think, have been abated. And they've got a great product. Supply chain issues are definitely a headwind, but again, a name to look out for. And then finally, on the income side of things, a little Canadian not a little Canadian company, a pretty known Canadian company called Enbridge, huge in natural gas. Again, we very bullish on energy, including natural gas and oil in 2023. Enbridge pays a very healthy dividend of somewhere around 6.5%, I believe it is. So any weakness in that stock, buying opportunity for a very, very decent income, dividend, solid dividend, consistent dividend, and a safe dividend, in our opinion, as well. Always do your research regarding any of the names here or any names you're investing in. But again, the big mantra for the coming year is not to fight the Fed. Once again, please hit that subscribe and like button to support our channel and allowing us to continue to make great content for you. Want to, in advance, wish everyone a happy new year and wishing everyone solid financial success in 2023. Thank you.